Hello, I'm Maiki Oreta, and welcome to Trade Talks, where we sit down with industry leaders, innovators, and change makers who are shaping markets, challenging norms, and making an impact. Here we explore the strategies that drive progress, the challenges that push industries and communities forward, and the ideas reshaping the way we work and live. What's new, what matters, and what's next? Let's find out together. The Philippine economy is entering a new phase. Inflation has eased, growth is stabilizing, and all eyes are on the Bangko Sentral ng Pilipinas as it weighs the timing and scale of interest rate cuts after keeping them steady in the early months of 2025. For businesses, consumers, and investors, the big questions are: how soon will the BSP begin its rate cuts, and how aggressive will they be? With global uncertainties, digital transformation, and cybersecurity threats on the rise, how are banks adapting to fast-changing financial landscape? With the financial sector playing a central role in economic recovery and expansion, banks have never been more crucial in fueling business growth, job creation, and financial stability. One bank at the forefront of these changes is China Banking Corporation. As one of the country's largest financial institutions, China Bank has been making headlines with major milestones: 24.8 billion pesos in record earnings in 2024, 18% loan growth across key economic sectors, and rejoining the Philippine Stock Exchange Index after 14 years as the industry navigates monetary policy shifts, digital disruption, and new growth opportunities. How is China Bank positioning itself for the future? Joining us today is Patrick Cheng, the Chief Finance Officer of China Bank. Patrick, welcome.
Thank you. Thank you for having me on the show.
And congratulations on the many milestones you've achieved.
Oh, thank you. Thank you. Yeah, it's an honor, and of course, it's a great tribute to the team and to the employees of China Bank.
Okay, fantastic. Patrick, let's start with the big picture. How would you describe the current economic environment, and what does it mean for the banking sector?
Well, economic growth last year was 5.6%. For this year, the government believes that we will get to at least 6%. Our China Bank research is a little bit more modest. It's around 5.8%. But nevertheless, that's higher than last year, and that's very close to the government's figures. So we're hoping that this year we'll have a little bit more momentum compared to last year. As you know, last year BSP had a number of rate cuts, had 3 rate cuts, but interest rates continued to still move higher a bit. But this year, we expect them to have 2 rate cuts, and more recently, they announced a reduction of reserve requirements, 2%, particularly on the big banks. That's a reduction of 2%. And so that will inject liquidity into the system. That should help banks finance growth. And let's not forget, we have the elections coming up in May, and the consumer spending from the election spending should be there, and that should help push the economy to slightly greater heights compared to last year.
Yeah, absolutely. We've got so much more momentum building things this 2025. It's actually a pretty exciting year. You project growth at 5.8% for this year. Is that correct, Patrick?
That's right. That's right. Ours is 5.8%.
And inflation at 3.1%.
Yes, so that should be well within the 2 to 4% band that the BSP says is really important for them.
So we've got stable GDP growth. We've got inflation at 3.1%, well within the government's expectations. We've got a 50 basis point reduction in interest rates in the offing. When do you think that's going to be, Patrick?
Well, the BSP paused last February, and many analysts had expected a rate cut in Fed. So hopefully that pause is temporary, and we'll move. Hopefully we will have a small rate cut, the initial 25 basis points to come in April. And then The other one will be likely in the latter part of next year.
Right. So all of that plus consumer spending with the elections, the cut in the reserve requirement ratio of banks. If you could describe the next half of the year in one word, Patrick, what would it be for the banking sector and for the economy?
Well, we are cautiously optimistic. Sorry, that's two words, but we are cautiously optimistic. Not bullish, but cautiously optimistic.
Not bullish. Why not bullish, Patrick?
Well, there are a number of geopolitical concerns, as you would note, a number of pronouncements or declarations. And so that obviously affects some of the environment, the unpredictability. Businesses want stability, businesses want a certain level of certainty, and these geopolitical issues, pronouncements, tariffs, etc., and possible actions later on, these obviously give businessmen a little bit more concern. So they want to be not exactly bullish, but a little bit more cautious, but still optimistic,
Right.
at least for the Philippines.
Right, and the central bank has tools to help offset that uncertainty. Speaking of those tools, the 50% cut in interest rates, how do you expect that to change borrowing costs? We saw 18% loan growth in Chinabank last year. Do you expect to see a surge in the demand for loan growth given that interest rates are coming down? And how might that impact Chinabank specifically?
Well, loan growth in the industry, we believe last year averaged in the middle teens, and China Bank had an 18% growth. So that was much higher than industry. But when we look at our internal numbers, the average daily balance for the growth, the average balances for growth in terms of loans was 12%. So what this means is that our 18% really happened, not a fair amount happened in the latter part of the year, in December, in our case. So that means that we have front-loaded some of that growth, and we won't see that much growth this year because some of our clients had front-loaded it, had brought it up front. But we'll still see a decent number this year, probably in the low teens.
Mm-hmm. And from a banking perspective, what do you expect to see as the impacts of the rate cuts on lending, profitability, and liquidity conditions?
Okay, the rate cuts help borrowers in general. Rates eventually should come down. But if you are a saver and you have lots of money in deposits, that may come down also if you leave your money in just time deposit. But nevertheless, the rate cuts will be good, and that will be more in line with what's happening in the country because we've had a high rates for a certain period of time when inflation was up. But with inflation coming down, our rate cuts should be good.
Yeah, that'll work for you unless you have fixed rate loans.
If you have fixed rate loans, then you just need to wait for the term to finish to be able to benefit.
Yeah, and just look at the long-term trajectory. Okay, beyond interest rates, what are the key macroeconomic trends shaping the Philippine banking sector as we head into 2025?
Well, with a number of companies continue to expand, the big conglomerates continue to expand, so that should be good. That should keep job growth there, and then as you mentioned, the rate cuts will obviously help spur businesses. But we've seen in our case, our clients, we've seen them getting big loans, chunky loans, and that can only mean that that is really capital expenditures and that they are looking beyond 2025, for continued expansion.
Mm-hmm. Speaking of capital expenditures, going to Chinabank specifically, year-on-year growth in 2024 was up 13%. You posted record earnings of 24.8 billion pesos for the period, driven by strong loan demand. What's your outlook for 2025 for Chinabank? And if you can tell, I'm not sure if you can tell us, but how much are you investing in your capital expenditure for the year?
Well, no exact figure, but capital expenditure for this year is still ahead of last year. Obviously, there's still a big chunk for IT, digital. The consumer, the Filipino, is very much into usage of digital tools and applications. So banks continue in our side, we need to continue to invest in digitalization, not just for the customer, but also for internally for us to be able to streamline our processes. So there's a big chunk that's going to IT. The next big chunk will be to some of our branches. We need to refresh, redo some of our branches. And then we have a new building. We have a new
Head office.
head office building, yes, which we will finish in 2028. So that will take another 3-4 years. And so that will entail a similar chunk of capex.
That said, do you still expect double-digit growth for 2025, Patrick?
That will be difficult. In the last 5 or 6 years, the Chinabank has grown its earnings from something before COVID, we were 10 billion, and we are now at 25. So over the last 5 years, 6 years, we've grown 2.5 times. So the mountain is getting higher and higher to climb.
The mountain's getting higher, but you guys are doing a great job. Your NPL, non-performing loan ratio, declined to 1.6%. How did you do this?
The bank is still quite conservative. We are still primarily in wholesale lending. Wholesale lending, corporate and commercial is around 75% of our loan book. So consumers are around 25%. So we continue to be quite careful, cautious in our credits, and we just don't want it to run away. And so I think the bank, the management, the board takes pride that we've got pretty good credit quality, not pristine by any means, but still pretty good.
Yeah, very good. And, moving forward, Chinabank rejoined the PSE Index in February 3rd of this year, 14 years after. How does this impact your strategy? It's a huge honor, but how does it change the game moving forward?
Well, I think it just reminds us, that we need to continue to do the good work. It's been a number of years. It has taken us a number of years to improve our performance in the past 5 or 6 years. And now that we have reached the index, I think it's important for us to continue to grow. It's important for us to continue to support our clients so that they can also continue to grow. So we should take stock of our performance. We should continue to execute, and then later on, let the stock price be where it should be.
Right. Okay. I'm going to ask you to hold that thought, Patrick. We're going to be taking a quick break. Trade Talks, Economy in Focus. We'll be right back.
Magandang gabi, ako po si Pinky Webb.
At ako naman si Corina Sanchez Rojas.
Kombinasyong Corina Sanchez Rojas at Pinky Webb. Dalawang mamamahayag na subok sa tapang at talino.
Simulcast tayo sa DWAR, Abante Radyo at 94.7 Mellow BFM.
Mapapanood din tayo sa Abante Teletabloid sa Sky Cable. Sa bawat issue may anggulo at ang balita may agenda.
Welcome back to Trade Talks, where we continue our discussion with Patrick Cheng. He's the CFO of China Banking Corporation. Okay, hi again, Patrick.
Hi, hello, thank you.
Okay, Patrick, the Xi family already owns Video, the country's largest bank, on several fronts. What distinct role does China Bank play in their portfolio?
Well, the family is happy to have two banks right now. The patriarch, Mr. Henry C. Sr., he got his first loan with China Bank. So I guess there is some sentimental value there. And he also invested, or he first invested in the bank in around 1980. That was the first year that he started to come in and buy shares. So since then, they have continued to accumulate, and I think a couple of years ago is where they got to their position where the family has, or the conglomerate and the family has around 39%. So China Bank continues to be an important bank in their portfolio. And yes, we've been asked this question many, many times. And again, this country continues to grow. We've had 6 to 7% growth for many, many years over a long period of time. We hope that this country will continue to grow. So as long as the pie is growing, there's a lot of space for everyone. This is not a zero-sum game. So there is space for two banks. There is space for many more digital banks that BSP wants to come in. Okay? Now, obviously, if the scenario changes, if we have reached a point in time wherein our population will start to go down, but that's still a long, long way off, or consolidation is more the name of the game. If the pie is no longer growing, then obviously the family will reassess accordingly.
Yeah, speaking of consolidation, Patrick, in this evolving banking landscape, have there ever been any talks of a BDO China Bank merger?
None at the management level.
Okay, all right. Can you also give us a deeper sense of the role banks play in the economy? As the economy grows, we need banks. We need banks because they're going to lend us the money to drive that growth. Can you talk to us about the interplay of this dynamic?
Well, as the economy grows, as companies grow, as the conglomerates get bigger, banks should be there to finance them. So that's really important. Our capital markets, our bond market, is still really much only for the top tier conglomerates, the AAA rated corporations. So for the rest, for medium sized, for individuals, it's really banks that they need to go to, and so we need to be able to fuel this growth. So it's really important. And I guess for the consumer, you always have day-to-day needs, which include payments, your savings. You have every now and then you need to borrow. You will need to borrow for a house, for a car, maybe for some personal needs. You need also, thirdly, to invest your hard-earned money. And fourthly, as you continue to accumulate, you will need protection. You will need protection, so certain protection products. And so banks, the way they are shaped right now, particularly the universal banks, they do all these things. They do the day-to-day, they do the savings, they do the borrowings, the lending, and they also have protection products for at least a number of banks. So this should cover really the gamut of financial needs for an individual. And then for corporations, of course, there's their excess cash, there's borrowings, there's cash management, and so on and so forth.
Patrick, you touched on the shape of banks. China Bank's total assets have reached 1.65 trillion. What's next for China Bank? Are you going to go through expansions, acquisitions, new product offerings? What's next for you guys?
Expansion, really not so much. We have already, in the combined group, we have 640 branches. So we continue to see how we can expand a little bit more, particularly on the countryside. Here, of course, in the urban areas, it's quite, there are obviously a lot of banks already, and there's a lot of competition. But in the countryside, in other areas, there's still space to grow. You will see our principals, the SM, their malls now are no longer in Manila. Their malls are upwhere in the north, over down there in the south. So we continue to follow their expansion. So that's the way China Bank has continued to grow. And at 1.6 trillion, that sounds like a lot, but there are banks bigger than us that have over 3 trillion, and one is close to 5 trillion already. So still a lot more room.
Okay. All right. In terms of growth, another thing that's on the rise, digital banking. How is China Bank investing in digital banking?
Well, we have invested a lot, before our operating expenses, or what we call OPEX, we would invest or spend 5% of it on IT. Now we are spending 7 to 8%. And this OPEX continues to grow on an annual basis. Last year, we grew by around 14%, 1/4. So the pie continues to grow, the operating expenses continues to grow, and we are now spending, from what used to be 5, we are now closer to 7 or 8%. So that pie continues to grow, and we're spending it on digital apps so that customers can bank with us anytime, anywhere. We have recently relaunched our mobile app, and the number of enrollments are increasing. And we're also using digital to streamline our internal processes, because banks have a lot of old legacy systems. These need to be replaced. These need to be strengthened and hardened, from cybersecurity attacks, and we take that very seriously. So still a lot more spending happening. And now we're tracking spending according to run the bank and change the bank. And our focus really is to put more money into change the bank and eventually lower the amounts that we spend for running the bank.
Mm-hmm. Speaking of changes, fintech firms and digital banks are totally reshaping this industry. You've increased your budget on AI-driven services from 5% to 7.8%. What does this tell you about where the banking industry is headed right now?
Well, it's really a lot more, especially with the advent of COVID. Digital has really just moved up, and I think all of us feel it. Before we would have to go to the bank, or we would have to go to the ATM. Now there are so many ways to pay and transfer funds, and the government wants to push this down to every level, even down to the marketplace, to the palengke. So there's really a push to really be digital. We all feel that, we all see that. And the digital banks are really, and the digital apps, are really at the forefront of this. So banks need to make sure that we invest to keep up with them and make sure that we are competitive and that we have our own share. So you can see digitalization really happening in payments, and the digital banks are now very strong actually in breaking in deposits, because their different business model allows them to pay higher rates, higher rates than the ordinary savings account. So there is really a lot of benefit, for those who use digital banking and the I would not say traditional banks, but the more modern banks. There is always space for both.
Mm-hmm. And Patrick, last question before I let you go. As CFO, you oversee a lot of critical financial decisions in a very fast-changing industry. What lessons can we learn from you about managing risk and growth?
Well, managing risk, it's not just financial risk, but really at the heart of banks, especially for a bank like China Bank, is that we lend. Okay, so credit is important. That's something that doesn't change. Even for digital banks, they all obviously will have different kinds of credit models. It will not be face-to-face. It will be more analytics. But your credit model needs to be good, because when you lend, you obviously want that there's a high percentage that you get paid back. And the margins are small. Margins in banks are like 2%, 3%, 4%. They are not margins of consumer goods where
Right.
the margins can be 20 or 30%. So your credit has to be good, and your back office, your operations needs to be good. So that's something we always want to take care of.
Well, we have great stewards and great fiduciaries in you guys. So thank you so much, Patrick, for all the work that you do to keep our banking sector stable and growing.
Thank you. Thank you for having Chinabank.
Okay, and that's it for today's show. I'm Maiki Oreta. Stay up to date on the latest in business and the economy here on Trade Talks. Catch us again tomorrow only here on BNC, the Bilyonaryo News Channel.